Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets. You've got Miles and Rob in studio today. Miles, what do the charts tell us?
Yeah, let's take a little look at the precious metals here over the last week, with gold up about 2.5%, $68 between our recording last Wednesday and today. But in our week here earlier this week, we had a push up to about 27.90. So gold is inching towards that 2800 mark and may just make it here in the next couple of days. We'll have to see how that plays out. Now, the reason I think we may just make it, we'll get to in a second, but let's move over to silver next. Silver, again, as usual, I keep repeating myself every week. Anything gold does, silver does a little bit better. So it's up about 6%, around $2 and a high of $34.80. So we keep playing in that almost $35 up to maybe $36 mark, Rob, that you and I talked about a week or so ago, that we're looking for a potential breakout, really important key level in the silver price. So maybe we'll touch on that again.
We backed up today, down 70 cents, down 2% today, back down to 33.70.
Yeah, and that seems to be a running theme with gold putting kind of a earlier week high in and inching back down. Silver putting an earlier week high in, inching back down. How about that platinum price, though? At one point, we were up about 3% on platinum, but now we're down almost 1%. So we had about a 4% swing, and we're down for the week. Big day down in platinum today.
Yeah, I mean, 3.5% down. Palladium gave up $63 today. It's down over 5% today.
It did, but at one point this past week, Palladium was up, I think, around 17% and is now up about 8% from where it started last week. So a lot of volatility in the white metals. And the S&P kind of dead flat. The S&P sort of hit this ceiling that it's considering what it's going to do next. You know, it's funny mentioning those white metals, Rob. I take a look over here at like copper, which is dead even. You know, we talked about copper a fair bit last week. Nickel also pretty dead even. So it seems to be just those precious white metals on the platinum and palladium side. So kind of interesting. I don't know what that has to do, if that has anything to do with current Russian relations, where we get a lot of our platinum from, but definitely a lot of momentum in the platinum and palladium market right now.
We'll see how it all plays out, my friend. I know we're looking at a lot of inflation. I know the bond market is in trouble. We did have a bank failure in Oklahoma last week, and if people had over $250,000 in their account, that's all they got back. They didn't get the overage. Thankfully, it wasn't a very big bank. Only about 7 million of the deposits were uninsured, but there's a lot of people sitting with money in the bank.
How come they didn't get over their 250? I seem to remember that Silicon Valley banks, for a couple of those people, got a little over 250. It's because rules for thee but not for me? Is that how that works?
Right. Difference between a blue state and a red state, my friend.
Is this the right time of year to be bringing up politics, Rob, with the election just 1 week away, looming around?
I think people just can't wait for this all to be over. Make the pain go away.
No, I completely agree. This might be making the pain go away indefinitely. We'll have to see how this election goes. But could be your last one ever, guys. Make it a good one.
Let's hope not.
So probably not. I still have some faith in the survivability of the Constitution. I think it's going to stick around at least a little bit longer. Yeah, it's going to be an exciting week next week, and I wouldn't be surprised if we see quite a bit of volatility leading into our show on Wednesday next week with the markets across the board. And gold coming into that 2,800 mark. That's a nice 000. 3 zeros are no different than any other number, but it does have a bit of a psychological effect. So could we see a little bit of a pullback in the gold price after the year we've had? I certainly wouldn't complain.
Right. But it just keeps inching higher, Miles. And it's anybody's guess as to where we see some profit taking, but everybody seems to be happy with their positions. No profit taking yet. And it does look like we're going to be knocking on 3,000 before the end of the year. But who knows?
No, I completely agree. Let's pretend we did put a high in this past week just for fun. I always kind of like to look back and say, okay, is there anything that would warrant that as far as laying in where we might see some of the pullback levels go to if that were to end up being the case? And obviously a lot of that trading we had back in April, May, June around 2400 looks like a pretty strong floor. Below that, you'd look at the old all-time highs going back to 2021, 22, around 2080 to 2100. So we've got some pretty good stair steps sitting below us, a couple safety nets on the way down. That would still only be looking at either a third or a two-thirds retracement. The fabled 618 two-thirds Fibonacci retracement is parked just above the previous highs at around 2085-ish. Again, I'm not calling for some sort of dramatic pullback, but I think Tori did a good job outlining about a month ago when we had the show where Tori went through some of the numbers following what really happens to gold 3 months, 6 months, 2 years following Republican versus Democratic elections. In the long term, it doesn't make a lick of difference, right? It really doesn't matter. In the short term, you do see a little bit of a difference where following a Democratic election, you do tend to see gold kind of take a little bit of a jump up. And in a Republican won election, you see gold take a short-term decline. So maybe the market's getting ready for something like that off of these pretty significant parabolic moves up, certainly going back since the summer. If we do see a little bit of a pullback, man, back the truck up. I don't see any break in the inflationary pressure going forward. So I don't know about you, but yeah, I don't see where the solution lies other than money printing and just kicking the can down the road.
Well, that's all they've got, and the bond market is very unhappy. I think we need to be watching that. I think we need to be watching the bond market triggering something.
Explain that a little bit to me, because the bond market is something I actually haven't spent a ton of time looking at outside of just philosophically. What do you think some of the problems we could see there? What's the issue? Let's say the Federal Reserve continues to raise rates like they want to. Let's say they pull them back like politicians want to. What do you think's going to happen? Put your Swami hat on, Rob. A little bit of wisdom going back to what you saw back through the 70s and 80s in the industry. And if we do see increased interest rates, how do you think that plays out in the bond market?
I don't think that's on the table, Miles. They cannot let interest rates go higher, even though when you look at the Treasury market, yields are increasing ever so slightly. The 10-year yield rose by 1% today. But in order to finance this gargantuan debt, and everybody knows the number, Janet Yellen is telling the government we must lower interest rates. And so we are going into a period where to carry the debt, the interest rates have to be lower because so much of our $35 trillion is very short-term Treasury paper. That's where all the money it went to. So they're going to lower interest rates, Miles, and in order to meet the gap between people not buying Treasury paper, they've got to print the money. So we are going into a world, and this is coming from people a lot smarter than me. We're going into a season where the interest rates are going to be dropping according to the Fed as best they can, but the bond market is going to start separating itself from the government. If they can't effectively lower the interest payment on the debt, we're coming to a point of real calamity. I mean, everybody's watching it. People know about the interest level and the $1 trillion annual plus interest payment to fund the deficit. We're going into a period of very strong inflation. There's no doubt about it. And I think gold knows that.
Well, I mean, if you're looking at like an effective Fed funds rate at 4.8 or so right now, that certainly gives them the wiggle room to do it. That is a big difference between a couple years ago where the Fed funds rate was like sub 1%, and you don't have a lot of wiggle room between like 0.5 and 0 on the way down. Maybe you're right. Maybe this isn't a period of time like, say, the early 80s where we were looking at Volcker level interest rate.
That's modern monetary policy is completely different from Volcker's stringent anti-inflation stance. What I think we will see is what I just said earlier. Lower interest rates, higher inflation. The Fed has made room on their balance sheet, like we've been tracking over the last few years. They have been reducing the Fed balance sheet. I think you're going to see the Fed balance sheet balloon.
Which is kind of a scary proposition. You know, one of the big things that we've talked about for a while is you need to see a couple of things happen if we're going to push back towards austerity, which is something that we've always wanted but are never going to get because it's not politically viable. It is economically viable, but it's not politically viable. And unfortunately, sometimes the people who get to make decisions are more concerned with the political viability of something. You have to raise the interest rates. That was one, which causes a decrease in borrowing. So you have to decrease the borrowing, not just on a private sector like us, but we needed a decrease in spending on the public sector. We did not get that. And then we also needed a decrease in what you just mentioned, the Fed balance sheet. The Fed can't be buying all their own bad debt back. That's not a long-term solution to the problem. And they've been talking about that for a couple of years, and that's been a big point. I mean, you and I have talked about the Fed balance sheet coming down over the last year, which we've been cheering on as a positive step forward. But if you're right, all they really did was buy a little bit of time and probably open the door for a much bigger problem.
Right. I don't think there's any way out. I think that's the way forward. I don't see any way out other than that.
Kind of makes sense why it feels like a lot of people are not just buying gold right now, but trying to get it in hand.
Yeah, people are taking delivery of their gold from the depositories right now.
Yeah, delivery and possession is starting, bird in the hand kind of concept, because I've been through it twice now, Rob, and you a couple more times than me between 2009, 10, 11, and then, of course, COVID. It doesn't take a lot of increased American interest to make the gold market disappear pretty quickly.
Yeah, physical gold can evaporate so quickly.
Not that I'm not a fan of different approaches to getting into the precious metals market, but sometimes, you can't eat the dream of a sandwich. You got to put an actual sandwich in your hands. And there's something to be said for that, I guess.
Well, I mean, just look at the inventory that we see flooding across our screens. We brought in 800 gold eagles, gone in 3 or 4 days. We bought in somewhere in the neighborhood of 7,000 or 8,000, 9,000 European fractional coins, gone. The bullion comes and goes, the collectibles come and go. I mean, as soon as it goes up on the board, in fact, sometimes it doesn't even show up on the board before somebody says, okay, I'll buy everything you got.
Well, and junk silver bags, which have become very, very popular because of everything we just talked about. Is there anything smaller, cheaper, and more recognizable and easier to get rid of? A fistful at a time. So those come in and go right back out the door.
Yeah, and bags are only 1% more than 1,000-ounce bars per ounce. They're still available, still a great price for bags of junk silver.
Today, and not so much 2 years ago.
2 years ago, they disappeared, but right now, at 1% more than 1,000-ounce bars per ounce, man, you have that bag premium so low right now. Great time to load up and then flip it back to 1,000-ounce bars, or with the ratio of silver to gold at 82.2 to 1 right now. Hey, let's say silver does make a run. Great time to exit the bags, pay whatever capital gain tax you have, and buy gold and really increase ounces, or do it in your IRA. Have a lot of people waiting in their IRAs to move out of silver back to gold, or at least begin to do that.
Well, I know I'm talking to a lot of people right now who are saying things like, man, I should have done something 6 months ago, or I'm going to hold off and wait for this pullback. And we like talking about stuff like that because we like watching markets move from a chart perspective on the show. But realistically right now, if you want to buy gold today and you don't want to take the risk, buy silver. You're just buying gold at a discount. You don't have to wait for the potential discount, because like you keep saying, every time I mention here's what a pullback could look like, you're not wrong when you say, or it could just keep going, because we've seen that. How many times did we talk about pullback at $1,200, $1,300 gold before it went to $1,900 10 years ago?
Oh, and I was certain this spring when gold peaked at $2,150, we were going to have a reversal, and it just kept going.
It is funny, though, at the beginning of the year, I think you did say, I think we're going to have a pullback, but I think we might see $2,800 gold before the end of the year, Rob. So I think you did nail that one on the head. You missed the middle part. You missed that middle part where we could all back the truck up at 1800 first, but you definitely hit the high end on the nose. So I'll give you a kudos there. Yeah, I think silver is definitely the play. I'm still buying a little bit of gold. I'm still inching my way into it personally and still recommending people do so. Because, again, we just don't know. I can show you some track record history from 2009, 2010, when gold really started moving after the '08 market crash, that there's 40 different places that gold could have taken a pullback, and it just never did. It just kept going. So that stuff can happen too. And if we're just getting started in this market, looking at what we think we have coming around the corner, pigs get fed, hogs get slaughtered, right? Yeah. I don't need to be greedy. I'm just going to be consistent.
Right. Well, that's pretty much it for me today, Miles. You have anything else for our listeners?
No, I think that's it. I'm just sitting here with the same bated breath that everybody else is, waiting to see how the world changes next week. So we will certainly see. Yeah, fun day in the white metals. So fun charts to look at. It's nice to see those showing the volatility we're used to and a little bit of a pullback there. So talk about a discount. Platinum's still looking pretty good too. So I think between silver, platinum, maybe even a little palladium, and keep chipping away at gold on a regular basis, I just don't know how you can go wrong over the next 3 or 4 years.
I agree.
So I guess that is going to do it this week, Rob. We're going to have a lot to talk about next week. So we'll see how things go. Maybe Tori will be back. If not, you and I will just carry the load.
I'll be down in Lake Wales, Florida for the big Band of Brothers conference.
Oh, so you're leaving. Yeah. I will see you there, but I will be here for the show recording on Wednesday. But I will see you in Florida next week, Rob.
I'll look forward to that.
Well, everybody else out there, we appreciate you joining us each week like you do. If you ever have any questions, feel free to reach out to us, Rob, myself, or any of the other advisors here at McIlvaney Precious Metals. We can always be reached at 1-800-525-9556. You can also find us on Twitter at ICA Gold or Facebook at McIlvaney Financial. Thanks again for listening. We hope you have a great week.